G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. So the topic for this video, will be going over the job openings that just came out, numbers. Also going over some other factors such as the fear and greed for the stock market, some other jobs, data charts, and looking at some companies' earnings that come out. And yeah, that'll pretty much end the video on that. It's all about the stock market and what happened last night. So we had job openings come in for June, and the forecast was 8.05, and consensus was 8 million. The previous reading was 8.23, an actual 8.184 was the reading that we got. So we had less job openings than we had previous month, but it was above a forecasted and consensus, so it was a beat on that. So the analysts, either they were revised lower, we don't know, but it's sort of positive in the sense that it was better than expected. Job openings data, but still not good, and I'll show you exactly why it's not good, and it's trending down. But yeah, that's what the reading we got last night. We have fear and greed at 42. So yeah, it's not looking good in that sense. I'll show you a timeline, and sort of back to sort of early July period, we did shoot up to greed. Mid-July hit 63, and we thought we were out of the rut here. We had some drops here in April, had some fear. We're in here for a while, for a whole month. We sort of come out of it. We went back down again and cut back out of it. Now we're back down again. Will we see further fear in this going into August as we sort of approach a 2/3 of the year, getting very close to the end of the year, and yeah, so we'll see how that goes. The fear and greed index. We have a tweet by Zero Hedge, and going back to the JOLTS numbers, job openings, and he suggests the labour market is in free fall. The private sector job openings are at 6-year lows. Number two, the highs plunged the most in over a year to lowers since April 2020. Quits tumbled to lowers since the COVID crash. So here's some charts. The job openings, government versus private. We have government in green and total private in red of the US. And that's the red's what the jobs numbers of openings coming in, and see it's declining, which is not a good thing at all. We had declining from 2019 to the pandemic, 2020, it declined, and we had obviously a recession there. And we started up here in early 2022, and we've been declining ever since, so that's not a very good sign. We did see it peak out a bit later, the government's openings, and it came down, but now we're starting to shoot up. So a lot of government jobs openings, listings being added, but it's seeing a big decline in the private industry. So private versus government, you can see a big divergence there. One's going up, one's going down. And to factor in that number, that government jobs, that's probably why you can see that the readings for June came in better than expected. 8.18 million versus what expected to do, because you see government starting to go up, and that is factored into the reading as well. So it makes sense why it's still holding up better than what people are really, seeing out there. And the jobs openings, if you exclude governments, it's looking very bad. Okay, so as he mentioned here, highs plunged the most over a year since lowest April 2020. So yeah, not a good thing at all. So April 2020, and yeah, we have to wait to see how that plays out. But Zero Hedge is not liking the data. He's a very good analyst when it comes to these numbers. So yeah, Very, very telling. We'll go on to stocks now. And the Magnificent Seven stocks have now raised a combined 2.6 trillion of market cap over the last 20 days. That's an average of 125 billion of market cap per day for 20 days. Site. Nvidia alone has raised over 1 trillion in market cap since its high seen 1 month ago. In other words, the Magnificent Seven has lost as much value as Nvidia's entire current market cap in 20 days. Wow. That's also 200 billion more than every stock in Germany's stock market combined. What happened to big tech? So getting a big sell-off in the Magnificent Seven, the tech sector. And as you can see there, it's dropped since July 10. And Nvidia's down 23%, Microsoft down 15%, Amazon 12, Google 12, 9 for Apple, 18 for Meta, and nearly 20% for Tesla. And this is the total lost in market cap, and the numbers add up to 2.6 trillion. So yeah, the last 20 days have been pretty bad for the top 7. So we're starting to see rotation into small caps. That's what the Russell's been doing well. Russell 2000 compared to NASDAQ, so it's outperforming. We're seeing rotation from these big companies that have done so well in the past year, going into the smaller companies that haven't done as well. And the rotation, the numbers are very obvious here. So yeah, it's not very good. The top companies making up the S&P 500 and the NASDAQ 100. So another Kabasi letter tweet. Breaking Microsoft stock crashes over 8% after reporting Q2 2024 earnings. The stock has now raised 260 billion worth of market cap during after-hours trade. This comes after Microsoft beat expectations on both revenue and EPS. Microsoft report quarterly revenue of 64.7 billion and EPS of $2.95. However, Microsoft's cloud revenue narrowly missed expectations, so more pain for big tech. So it only slightly beat expectations, less than a percentage, I believe, for EPS. So, yeah. And anyway, we see it sell off big red candle there on the 30-minute time frame. And that's why it looks so big, such a small time frame. But it falls 8% after reporting earnings. And it raised $260 billion of market cap, just like that. Amount of money, in these stocks that come and go. Ridiculous. So, yep, it didn't quite meet expectations of the investors, and they sold off. Then we have Starbucks report second straight quarterly decline in revenue, with Q2 2024 revenue falling to 9.1 billion, below expectations. The traffic at US stores fell by 6%. The same store sales slid 7% internationally. In China, same store sales were down by a massive 14% last quarter. The company's overall same store sales fell 3%, with a whopping 5% decline in transactions. Both US and international Starbucks stores continue to face very weak demand. What happened to Starbucks? So yeah, it's traffic is sliding 6-7% monthly, and yeah, it's not good for revenues, not good for sustainability of the company, and it's really because Starbucks is premium coffee, it's more expensive, and people are cutting back on those things. They're more expensive stuff that we don't need. It's more of a want, and making coffee from home, which is way cheaper, or just buying it from a local store, which is even cheaper. And yeah, it's definitely not looking good for Starbucks. It's just transactions are falling as well. Everything's falling. Weak demand. The consumer's struggling, and the cost of living is still high, despite the inflation numbers coming down. We're still high inflation, and people are just giving in and not spending the extra ridiculous amounts for Starbucks coffee. And the stock here we have actually didn't do too bad on the day. So yeah, it didn't go down like Microsoft did. even though Microsoft slightly beat expectations and Starbucks didn't. Sometimes the price action doesn't quite follow the narrative there. So it's because it's already had a big sell-off. 6 months ago, we were at $97, down to 75. So down 20% in 6 months. Year to date, down 19%. Yearly, 25%. And 5 years, it's done nothing. So it's really, if you zoom out, it's really on a decline. It's not doing so well the year. So it's had its beating. Whereas Microsoft's starting to feel it now. Only just recently, as as powerhouse companies, Starbucks feeling the heat. And the numbers just here on the financials. So for June, EPS missed by 0.12%, and its revenues missed by 1.5%. Not too bad, but yeah, it is a miss nevertheless, and it's not good for those two companies. Especially with Microsoft. Yeah, people blame it on earnings, but really, I think there's just a lot of profit taking happening because it's been gone up so much. This past year, it's been one of the top performers and shining companies, and yeah, you can just see that when people want to sell, they sell big, and they give it opportunity. When earnings comes in, it's an opportunity for them to get out. All right, so price leads narrative, not narrative leads price, because so these weren't too bad of numbers, but expectations. But yeah, if people are getting out because they believe that overvalued stock market at the moment. It's just ridiculous. The video overtaking Microsoft and Apple as the world's biggest company. Same thing happened in 2000 with Cisco overtaking Microsoft as the world's largest company, and not too long after that, we had a big stock market crash. So it could be repeating itself again. But you got to look at these also numbers coming up. We have the interest rate decision in the morning, 4 a.m. Fed press conference. So whether rates stay the same, I do think they're going to stay the same. And then we've got some manufacturing data, some jobs numbers are very, very crucial. This will really shake up the markets. And if they come in hotter than expected, I believe 4.2% of unemployment rate comes in at, then we're looking at a recession. Okay, some will be triggered, 0.5, and there will be a recession. Otherwise, if it stays 4.1 or below, we're still out of the recession camp. And on-farm payrolls will be interesting to see. Jobs added, how much the government jobs taking up versus private, because it's always going to compare the two. See if it's manipulated, and see if the revisions are lower. See if they're manipulating the numbers and forecasts to make themselves look better. So revisions and just seeing the manufacturing sector hold up going into the end of the week. All right, guys, I hope you enjoyed my video today. Just going over the JOLTS numbers, job openings numbers, coming better than expected, but comparing it the jobs openings from government to private, and seeing that government jobs openings are going up while private's going down, and you can see divergence there. So it's a bit manipulated and unfair for the average individual, and the data is really skewing, favouring government jobs over private. So that's why we're seeing beating expectations for that number. We also look at the fear and greed, seeing we're in fear territory, 42. The stock market, looking at Microsoft and Starbucks earnings, and Microsoft slightly underperforming in the cloud-based revenue, but everything else beat. So it wasn't really a bad earnings report, but the stock sold off 8% after hours, the earnings. And then we had Starbucks missed by 0.12% into EPS and 1.5% on revenues, and it didn't really sell off at all. So Starbucks has already felt the heat for the year, so it hasn't been doing so well. And we looked at the what the unemployment rate's going to be. It's very crucial. Interest rates going forward to see if the stock market's really reached its climax, and it's similar to like 2000. We had tech stocks outperforming. There was only a handful, and then one's coming out of nowhere. But overvaluations really hit, and see if the insiders keep on selling these tech stocks and trickle down to the rest of the market, because seeing a rotation in small stocks. So whether that lasts a long time, you don't know. We have to keep looking at analysing it and just waiting on economic data, like the jobs numbers and retail numbers and other numbers, to see what the Fed's going to react to, because they react to these numbers. Okay, they look at it really seriously, and when they cut, I believe this will be because of weakness, not because of strength. And you will see the top very, very soon. So recession is imminent. Just got to wait until Friday night, and that'll be very, very telling to see if we're in a recession or not. So, yep, I hope you enjoyed this video. Just please smash the like, comment your thoughts below, subscribe to stay updated, and I'll catch you in the next one. Cheers.